Welcome to Pyle's Podcast, a weekly discussion of economic and market developments as they pertain to you, the client. This podcast is for information purposes only, and the author has taken all usual and reasonable precautions to determine that the information contained has been obtained from sources believed to be reliable.
Podcast for January 29th, 2009. The Hail Mary Pass. On February 19th, President Obama will pay a visit to Canada, his first official foreign visit since being sworn in. Given that we have not normally been at the front of the line for presidential get-togethers, whether or not the governments in both Ottawa and Washington were of the same political stripe, I suppose we Canadians should feel honored and privileged. Actually, if we dismiss the fact that Stephen Harper and Barack Obama are not of the same stripe, the two gentlemen are experiencing some parallel developments, and some interesting differences. Each man has recently come to power, although Harper's redecorating of the official PM residence took place well before the Obama family's White House makeover. And each one of the two North American leaders has been tasked with delivering a fiscal response to what has become a deeper and more painful recession than their respective advisors may have admitted this time last year. And this past week, both men detailed exactly how aggressive that response would be. With a victory in the House of Representatives, Obama's $819 billion stimulus plan now moves on to the Senate, but is expected to be signed into law before his visit to Canada, even though the final version may be amended from the current plan. By contrast, Harper's stimulus budget this week was smaller, even if we take the total amounts involved over the 2 years of just over $60 billion. This difference in approach is justified based on recent data and by the observation that Canada is not suffering a recession anywhere close to the U.S. Yet as we all know, history is not always a good predictor of the future. But there are two other key differences which are masked by this. One is on the willingness to respond to economic backsliding. The other is on the ability to respond. Even before the ink was dry on Obama's stimulus package, the U.S. federal government had already racked up a record-high fiscal deficit in the past year of almost $500 billion. Considering that the economy had barely slipped into recession at the start of 2008, and of course the renewed decline in government borrowing costs, this was not a good sign. I don't believe that the U.S. is going to become a basket case economy, but the realistic assumption is that the cumulative deficit over a 3-year time span will come close to $3 trillion. In Canada, we have become concerned over the fact that the federal government is planning on adding about $85 billion in debt over 5 years, but after paying down debt for the past decade, this looks more like an oops than a chronic failure. Now, I'm not getting complacent here. Canada has had strong fiscal laurels before, only to get scratched when it leaned too heavily on them. Failure to rein in spending and the deficit, combined with a larger than expected rise in interest rates, could make borrowing costs on the national debt a major structural element of Ottawa's budget again. That aside, Canada was clearly in a better fiscal position to deliver a proactive attack on the emerging domestic recession. The question is, why didn't the government assemble the troops sooner, at least before the U.S.? I'm not going to rehash old debates on this issue. And again, I don't want to debate the view that there was no perceived need for fiscal action until this month. By now, we have satisfied ourselves that such a view is and was incorrect. Storm clouds were on the horizon after Bear Stearns went under. They drew nearer and darker when commodity prices started to tank, and rain started to come down as markets crumbled in October. Obama had an alibi in not getting out a fiscal plan until the hailstones started falling, and that was because he wasn't allowed in the Oval Office until last week. No such alibi in Ottawa. Yet here we are with two fairly aggressive plans about to be implemented. The question is, will they work? No doubt we'll probably see similar feats of heroism in this Sunday's Super Bowl, and like football, the fiscal Hail Mary passes might make it to the end zone. But there remains a sizable risk that the ball will either be picked off or fumbled midfield. I'm optimistic, but 2009 will likely be a nail-biter all the same. I'm Andrew Pyle, Wealth Advisor with Scotia McLeod. Have a wonderful and prosperous week.
The opinions stated are not necessarily those of Scotia Capital or the Bank of Nova Scotia. Scotia McLeod is a division of Scotia Capital Inc., member CIPF. Feedback or questions on this audio can be sent to podcast@andrewpyle.com.